The most important investment you can make is in yourself. I mean, very, very, very few people get anything like their potential horsepower translated into the actual horsepower of their output in life.
Do you think buying baseball teams is a good investment?
It's been a good investment. It's not been a good investment necessarily because the earnings have gone up so much, although cable television multiplied the value in a big way. In effect, television expanded the stadium. Wrigley Field probably seats less than 40,000 maybe. So you had 40,000 seats available when I went there for my first Major League Baseball game in 1939. But then along came television and then cable television for baseball or sports networks. And that multiplied the seats in a huge way. Now, a lot of that went to the players, but some of it stuck to the owners. When I was your age, I would have thought if I made a lot of money, I would have bought a team. But there were a lot of things I thought I would do then that I haven't done subsequently. So the Cubs sell for $700 million, and you've got a percentage of that in your bank account. Now, I don't think I would buy in at that price. There's a psychic income to many people in owning sports teams. I mean, it makes them famous, maybe not in the way they anticipated when they bought the team, but it is a way to instant celebrity and recognition and all that. And as long as we live in a society where people have loads and loads of money, a certain percentage of people are going to want to become known for the fact that they have done very well in life, and a sports team is certainly one way of doing it. That isn't the only reason people buy them, obviously. I will say this, you are not the first one that's asked me about buying the Cubs. I've had calls from, not from Sam, but from other people, and I think I'll leave that to you. The most important investment you can make is in yourself. I mean, very, very, very few people get anything like their potential horsepower translated into the actual horsepower of their output in life. And potential exceeds realization to just an enormous factor with so many people. And one illustration you might try with your class, I tell them this when I talk to high school groups. Just imagine that you're 16 and I was going to give you a car of your choice today, any car you wanted to pick, but there was one catch attached to it. It was the only car you were going to get in the rest of your life. So you had to make it last there. You can pick out the fanciest one you want, a Maserati, whatever it might be. How would you treat it? Well, of course, you would read the owner's manual about 5 times before you turned the key in the ignition. You'd keep it garaged. Any little rust you would get taken care of immediately. You'd change the oil twice as often as you were supposed to, because you know it has to last a lifetime. And then I tell the students that you get one body and one mind, and it's going to have to last you a lifetime, and you better treat it the same way, and you better start treating it right now, because it doesn't do you any good to start worrying about that when you're 50 or 60 and the rust, that little speck of rust, is turned into something big. So anything your students do to invest in their mind and body, particularly your mind, we didn't work too hard on the bodies around here, but it pays off in an extraordinary way. Your best asset is your own self, and you can become, to an enormous degree, the person you want to be. When I get classes in universities, I just ask them to imagine they were going to buy one of their classmates to own 10% up for the rest of their life. Which one would they pick? They wouldn't pick the one with the highest IQ or necessarily the one with the highest grades. They pick the person that's going to be effective. And the reason people are effective is because other people want to work with them. They want to be around them. And other people they don't want to be around. And those are qualities that an individual picks up: being generous, being humorous, being on time, not claiming credit for more than you do, but rather than less than you, helping out other people. All kinds of human qualities that turn other people on, and then there's things that turn on people off. And those are habits, and they're the habits that you pick up when they're the age of your students. The habits they have today will follow them throughout life, so why not have good ones? So that's the only message I would give to your students.
Well, I've got a specific suggestion that answers your specific question. I would add to that extensive repertoire of yours by teaching them to avoid being manipulated to their disadvantage by vendors and by lenders, using the standard tricks of the vendor and lender trade. And you couldn't start with a better book than Cialdini's Influence. And I think Bob Cialdini, who's a shareholder, is here somewhere in this audience. So I have a new textbook that I suggest you add to your class, which is Cialdini's Influence. And he's just got a new book that's coming out and for sale in Omaha today, I think, for the first time. And that's called Yes. So here's 2 books that I suggest you add to your class.
Americans at the individual, municipal, state, and federal level historically do not save. On the other hand, Asians save approximately 40% of their income. First, First, why is it that Americans do not save? And secondly, what can we do to correct this long-term problem?
Yeah, well, certainly the savings rate in this country has fallen significantly and may even be negative, although it does seem to me that the value of the country in real terms, I think, does increase quite significantly decade to decade. So I'm not sure exactly how it happens without savings, but it does seem to me that this country as a whole is worth considerably more than it was 10 or 20 or 30 or 40 years ago in real terms. So something good has happened. But the propensity to save almost seems innate. I mean, we've got our friend from Florida teaching children to save, and I think that has some impact. And I should have thanked Andy Hayward for that terrific cartoon this morning, and he's got a program that I'm participating in that we think in cartoon form might influence a few younger people towards saving. If you own Berkshire stock, you're automatically saving because we retain earnings, and your indirect interest in those retained earnings is a form of saving. So you can spend every dollar of your income that comes in the other way, and if you own Berkshire, you are net saving, which is a practice I've now been following for 43 years. I don't know that the savings rate is based on calculations made on consumption and imports and so on, and we are importing $700 billion more of goods and services than we're exporting, and that means that somebody else is doing our savings for us, basically, as we export ownership and claims against America. I think that's going to have consequences over time, but we are so rich that it may not be really apparent. I think the average American standard of living is going to improve in real terms, although I think it may be very, very, very disproportionate, the extent to which particularly the super rich benefit compared to those in the middle class. But net, I think the country will be, even with our present policies, in net real terms, the value on a per capita basis of the country will increase from decade to decade, but nothing like it will in places like China or Korea, percentage-wise, where the savings rate is very high. This country may not save very much because it may not need to save very much. We have $47,000 of GDP per capita. It may not be distributed very well, but we are one very, very, very rich country, and a very rich country may not need to save as much as a country that's trying to reach its potential.